Hey everyone, welcome back to Corporate Decoder. Today we're diving into a report from Lord Abbett Private Credit Fund. It's not exactly a household name, but their recent moves in the private lending world are pretty interesting. Kind of like finding out your quiet neighbor is secretly a race car driver. We are going to see how their bets are doing and if we should follow suit. This is a current report, also known as an 8K, filled with the Securities and Exchange Commission. It's basically a company shouting, hey, something important happened to its investors. In this case, Lord Abbett is telling us about a recent sale of stock, a new distribution to shareholders, and some updates on their investment portfolio. First, let's talk about that stock sale. Back in March of 2025, Lord Abbett sold about 849,449,040s to new investors. The total price tag for these shares, around $21 for $1 million. They sold each slice for $25.20. Now, the interesting part is that this sale wasn't registered with the SEC, meaning they didn't have to go through all the usual hoops. The company claims they were able to skip the registration process because the sale involved accredited investors, meaning people who meet certain income or net worth requirements. It's like having a VIP pass to the investment party. Next, let's look at the dividend. Lord Abbett declared a distribution of $0.24 per share. Think of this as a small thank you to shareholders, a little cash bonus for owning a piece of the company. Now, let's dive into their portfolio, which is essentially where they're investing their money. As of late February 2025, Lord Abbett had loans out to 26 companies and an equity investment in a joint venture. They had committed about $820 million and held approximately $586 million. Almost all of that, 94%, was in first lien debt and 6% was in equity investment. In a joint venture, dollars as owning a small piece of companies. It's like having a diverse garden of investments, with most plants being safe bets and a few being higher risk, potentially higher reward ventures. Here's a key number. The weighted average yield on their debt investments at cost was 10.0%. In simple terms, this is the return they're getting on their loans. A 10% yield sounds pretty good, but remember, higher yields often come with higher risks. It's like promising a big return for taking a big chance. Now let's look at some numbers from the companies Lord Abbett is lending to. The median or midpoint 12-month EBITDA earnings before interest, taxes, depreciation, and amortization was $71 million. You can think of EBITDA as a measure of a company's operating profitability, how much money they're making before a lot of the accounting stuff kicks in. The weighted average net leverage was 4.6x. This is a debt ratio that helps investors understand how much debt a company has compared to its earnings. A leverage of 4.6 means the company's Lord Abbett is lending to have a good amount of debt relative to their earnings. The weighted average loan to value was 42%. This is a key metric because it shows how much of a company's assets are financed through loans versus equity. A loan to value ratio of 42% means that the loans make up less than half of the company's total value, meaning they are relatively conservative. The weighted average interest coverage was 2.2x. This ratio shows a company's ability to pay the interest on its debt. An interest coverage of 2.2 means a company has enough profit to cover its interest payments, but it's not a huge cushion. It's like having just enough money to pay your bills, but not much extra. Between early February and late February, Lord Abbett made some new investment commitments of around $134.3 million. Finally, let's talk about net asset value. As of late February 2025, Lord Abbett's net asset value, or MF, was about $248 on $3 million. The M per share was $25 share. How much it's worth based on assets minus liabilities. So what's the story here? Lord Abbett Private Credit Fund is actively managing its portfolio, selling shares, paying distributions, and making new investments. Their portfolio seems relatively healthy, with decent returns and reasonable risk. However, it's important to remember that these numbers are just a snapshot in time. The world of private lending can be volatile and things can change quickly. It's all signed by Salvatore Dona, Chief Financial Officer. Now, looking at Lord Abbett more broadly, they seem to be playing it relatively safe in the private credit space. Their focus on first lien debt and a reasonable loan to value ratio suggests they're prioritizing stability over high risk, high reward investments. However, the high leverage of companies they are lending to at 4.6x does present some risk. If the economy slows down, these companies might struggle to make their debt payments. Their portfolio yield of 10% is attractive, but it comes with that added layer of risk. In conclusion, Lord Abbett Private Credit Fund appears to be a well-managed player in the private credit market. But like any investment, it's important to do your own research and understand the risks involved. Thanks for watching. If you found this breakdown helpful, please like, comment, and subscribe for more Corporate Decoder deep dives. Let me know what company I should decode next.